markets. The Dow Jones up 0.4%, along with the S&P 500. The Nasdaq outperforming. It's up about 0.9% at the moment. Well, joining us now is Tim Evans from Longleaf Trading Group, live from the CME in Chicago. Tim, great to see you there. Now, it certainly has been all about this flurry of M&A activity, which certainly got the market off to a pretty hot start today.
Yeah, hi, Leanne. Nice to be with you today. But absolutely, that M&A activity got the market in a kind of a risk-on mood, and market stayed pretty strong all day. I mean, we had that, on the back of, seeing some positive manufacturing readings out of Europe. We saw French beat expectations, German manufacturing beat expectations, Eurozone, and then followed up by the States this morning with manufacturing PMI. So, yeah, it was a lot of good, positive, upbeat news to get the week started.
Yeah, absolutely. And as we know, I mean, lately Wall Street has been receiving this support from better than expected earnings reports as well. That's been a big focus. We're entering the busiest week now of the third quarter. What is it, about 180 companies that are set to report this week, and a lot of the big tech giants as well, the likes of Apple is on the list there. What are you expecting or hoping to see out of that result?
Well, I mean, I think the market is, based on its price actions, kind of telling us what it's expecting. I mean, so far, so good for U.S. companies. The long run average is about 64% of companies beat street expectations. We're moving at a track of about 79% currently. So I think the market is kind of projecting some of those results into the heavy activity this week in terms of earnings reports. So yeah, I think I think all in all, the market's looking for some pretty upbeat news across all major companies.
Yeah, absolutely. All right, now that was obviously the focus there today as well. We had some PMI data coming in today as well, which was, I think, above expectations there. So it seems to be boding pretty well for future growth. And we saw the US dollar rallying on that news.
Yeah, believe it or not, the U.S. dollar actually does rally now based on growth news. I mean, we've for so long been tracking, whether the Fed will or will not raise rates, or what, prevailing interest rate policy is. But, we have seen a break from that in the recent past here over the last couple of months, as the, dollar's caught a bid all the way up to slightly under 99, which is historically very high. So I mean, the market is in fact reacting to, relatively positive data, at least compared to the European and Asian peers. And manufacturing PMI today, supported that basic idea. We came in at 53.5 today. 51.3 was expected. So, the market received that pleasantly.
A big supporter of driver of the US dollar at the moment is around interest rate expectations. Comments by policymakers again today have come through for sort of guidance on the Fed's next move on interest rates. I think we had 4 central bank officials scheduled to speak throughout today's trading session: Dudley, Bullard, Powell, Evans, and so forth. Have we sort of received any clues as to the Fed's action in the future?
Nah, I mean, more of the same. I found Fed Governor Bullard's comments to be the most telling. I mean, really, it seemed that he would be in favor of a potential rate hike here in the near term, because his view, which he, went on in detail about, is that interest rates, given the environment, given the growth environment that we have in the United States and internationally, that interest rates should remain low, whether the Fed is manipulating those rates through monetary policy or not. So, the kind of the conclusion from that, I think, is that they would support a Fed rate hike, given the fact that they're not expecting market forces to take interest rates much higher from there. But I mean, really, nothing substantial, nothing new, no break from, prevailing consensus in terms of what the market's looking for right now. We're still at about 69% Fed funds if you look at the probability function.
Yeah, okay. And of course, well, I mean, a lot say that the Fed wouldn't be taking into consideration what's happening on the political front, but I mean, it would be interesting to know whether that would sway a decision or not, because as we know, there's only 2 weeks to go now until the election in the United States, and it does look like Hillary Clinton is still holding that commanding lead there in most of the polls. So we're expecting, though, sort of stock market volatility over the next couple of weeks in the lead up to the election.
Yes, I am. I mean, there's a you know, a lot going on. I mean, you know, what tends to be the main focus is whether, you know, Hillary Clinton or Donald Trump will win. But, you know, I think the market, you know, if we kind of look back at the way the market's responded in prior elections, you know, I think what the market wants to see is gridlock. The market likes status quo. The market doesn't like dramatic changes. The market doesn't like revolutions. You know, whether it's true or whether, you know, for good or bad, Hillary Clinton kind of represents the status quo. And, you know, the market, I think, would receive her winning the election a lot easier than it would Donald Trump. You know, so as we're kind of moving on over the next 15 days, if we see, you know, any kind of change in terms of how, you know, how Donald Trump appears to be doing and, you know, projection going into Election Day, you know, that could definitely bring some added volatility. Another main factor here with the election is, you know, whether the Republicans will retain control of the House and the Senate. You know, recent polls have kind of shown that the Republican House control even might be in danger on top of the Senate. You know, and the market typically does not like when one party controls the presidency and both chambers of Congress. So, you know, that it's going to be a fluid environment here over the next 15 days, and, you know, we'll be able to tell how those polls are looking based on daily market activity for sure.
Absolutely. All right, Tim, it's been great talking to you as always. Thank you so much for joining us.
Have a great week, Leanne. Thanks.
Tim Evans joining us there from the CME in Chicago. Time for a